Hello, good afternoon. You're watching Closing Trades on ET now, and for now, the entire basket of the key indices has turned into the red. For most part of the trading session, we were in the green above the mark of 24,100, but seems like that the tables have turned for now. So there's a bit of a red on the screen, and in the last few minutes, we have seen a bit of a pressure come by across the boards. Financials have been a big drag on the market today. So Bank Nifty was in the red for most part of the trading session, and what's causing the pressure there is not only the heavyweights, the private banking names, but PSU banking names are also lagging today. So those are the names which are under pressure. Kotak, however, has managed to recover from the day's low after putting out that clarification and statement coming in from the group. So we are watching out for that stock as well as how that entire story pans out. In the meantime, IT has been the key soldier per se in terms of the bulls today. So you have stocks like Coforge, Infosys, Wipro, all of these fairly active in the trading session. Nomura turning bullish on the entire sector, plus those upgrades that we have seen on Wipro. Paper stocks are also building on to gains. So, JK Paper is up 16-17%. Other names also up for you on the screen. We did speak with one of the managements who confirmed the price hikes that have happened in the system. Real estate stocks like Godrej, Sobhat, Sectoral also building on to gains. However, having said that, that SEBI ruling with respect to the uniform pricing and no slab structure has put some of the brokers under pressure. So, Motilal Oswal, Angel One, Geojeet's broker, all of those are in the red right now. Having said that, L&T is one of the top gainers on the index. Ajay, you spoke with them. The big order that they had bid for in November has finally got confirmed. But interestingly, they're talking about more opportunities coming in from that segment from here on.
Yeah, that's correct. I spoke with the hydrocarbons head of L&T. They talk about a very good outlook on hydrocarbons, not only domestic, not only from the Middle East, which is a big area, but also domestically. Most of the energy companies here in India are in expansion mode. A lot of private companies are going the new energy way, and they themselves are going the new energy way. So the commentary was very solid. It has 12% of overall revenue right now, but clear guidance coming in that margins have upward bias as far as 10-11% of 12% of the revenue of L&T is very meaningful for their profits. Let's hear out, and we'll come back and discuss markets on the other side of this message.
Security is a big issue for India, and ONGC is one of the major developers, and they will continue to invest, in my view, and we will participate in those and play a role and contribute in the development of those infrastructure. When it comes to refineries and petrochemicals, it's cyclic. Now, a lot of projects have been already underway or completed, and the next cycle will start soon. And we are seeing that some refineries in Bina and also in South. And then more importantly, also, I think all these refineries also will go for integrated petrochemicals, because petrochemicals is the future. With the growing economy and high GDPs, the demand for petrochemical also will increase. So the country will have to invest in petrochemical projects. In addition to that, like you said, we have positioned ourselves also for the newer energy and cleaner sources of energy. L&T Power has been now renamed as L&T Carbon Light, so we will participate through that business in some of the carbon capture and projects, and also other carbon light solutions. And then in the green,
L&T hydrocarbons head. But coming back to markets, Aisha, remember I was telling you that there is urge to trim profits. Today, the top was made in the first 15 minutes of trade.
Yeah.
Pull up the intraday Nifty and Bank Nifty, you would see, yes, there was a bit of an attempt to pull back, but the highest point of the market actually was made at opening. Since then, market has not come back to that level. As we are hitting newer highs, both small cap, mid cap, such healthy profits. Trimming profits is something which is kind of the urge is there across the market right now.
No, but I want to understand, what are the mutual fund participants doing right now? They can't get away with that urge because the amount of inflow which is happening in SIPs is just keeping them afloat. They don't know where to
mutual funds
deploy.
actually are like, they are tied to the Singhasan in a way, because they are sitting over 1 lakh crore liquidity right now, and their mandate is to be fully invested.
Exactly. So there's a cap of 10% cash. Where are they going to deploy ultimately?
So of course that is not going down, but the trader community, the big HNI community, and self trading guys have only gone up. How many people actually have, out of 100 people in that having exposure in the market, the part which want to do it themselves are actually rising. And this, the screen is telling that self trading wala community is wanting to trim some profits here and there. So runaway rally from here on, is something which is not happening. That was the point I was discussing the other day. How does the setup look to you, Kunal, this
Yeah, it
afternoon?
still looks positive. Maybe after this 4-5 days of steep uptrend, we are just taking a pause for
Bit
the
of pause,
indices,
yeah.
because the Nifty is absolutely flat, and the benefit for that is because of the IT stocks which have been moving up higher. And on the other hand, you've seen selling in the few private sector banking names. I'm not saying all of the private banking stocks, but I believe it's more of a balancing which is playing out for the indices. Hopefully, I think we have still managed to held on to 52,000 odd on the bank Nifty on the spot levels, and 24,000 broadly on the Nifty on the spot level. So I think these two could be strong pivot zones for the index on an intraday basis.
Yeah, because if you just look at the texture of the index also, barring, of course, IT, which is in a trend today, there's only L&T and HDFC Bank which are supporting the index. But within banks also, look at how the rest of the banks are performing. Kotak, ICICI Bank, SBI, they're all down roughly about 2% apiece, if not more than that in case of Kotak. So I think the market texture itself is telling you that, tread with a little bit of caution. And this is, of course, not for the mutual fund investors. But yeah, let me take it across to Naresh as well and find out what his stance is on the market right now. Naresh, on the Nifty Bank, because there's a clear disconnect now with HDFC Bank doing its own jig and the rest of the pack, following a different move.
Yeah, so it seems like a fight wherein, say, 30, 40 points on the upside has been given by HDFC Bank on the Nifty, and another 30, 40 points on the downside is given by ICICI Bank. But the structure is very clear. HDFC Bank is coming close to that all-time high breakout. This should be the best closing for the stock on a closing basis after a really long time. And there are some expectations of a trigger coming in form of a MSCI inclusion. And that could be known once the shareholding is out. So if it crosses 1740, it could get into a spike move. So positive on the Bank Nifty purely for the reason that the largest weight is breaking out. On the other hand, we've seen a downtick come on Kotak Mahindra Bank around some news. But at 1700, 1740, that also becomes a good zone to accumulate that one as well. So overall, this dip on the banking index is a buy according to me.
In fact, the bank has recovered quite reasonably. It was at worst point in time, it was down almost 4.5%, but has come back. But PSU banks as a pack, if you could show in one stack all the PSU losers, they are giving up a lot of steam. And the PSU bank index is down 1.5%. Deepak Shenoy is joining us now. Deepak, afternoon to you. The kind of profit taking which is setting in the PSU banks, are you having any names on your radar which, if they come down to your level, you'll start nibbling in?
Yeah, I think, to be honest, I think the problem right now is, they're going down from very unreasonable valuations in some cases, but there are some banks within the pack, especially in PSUs, where I think there is opportunity. Indian Bank, for instance, has generally demonstrated, even before the mergers, it had demonstrated a recovery that was kind of peculiar even among public sector banks. So I think that would be an interesting buy because I think they've managed to clean up a lot before, a lot more than some of the other banks, and in comparison, they have a better growth trajectory. SBI is always interesting because it's the most aggressive of the lot in terms of market share, in terms of certain penetration, specifically home loans, where I think RBI is also pushing banks to increase market share in compared to personal loans. But I think there's a headwind there because SBI did a lot of unsecured lending as well. But therefore, of the public sector bank, Indian Bank looks better. We have a bunch of private banks in our portfolio, so a little bias there.
Deepak, are you using this dip to buy in some of those brokerage names and the stock market ancillaries? Because time and again, they've managed to kind of, reimagine themselves in that sense or find a way out to all of these SEBI regulations, etc. Would you be buying the dip at all on the likes of Angel, Motilal Oswal, Geojit of the world?
Yeah, the dip has come, I think, on the back of, this particular news, which is, I think, fair, because you should be true to value. If somebody says the NSE fee is X, then NSE fee should have been X. It should not be that the broker gets a volume discount and therefore is able to charge, pay less than that X to the NSE. In effect, the broker could increase the brokerage instead if they want the same volume from the customer. And that, of course, has other commercial issues because then competition comes into play. But more importantly, I think, there are cross marketplace players that are not just brokerages, like Motilal, for instance, which may be attractive because they have the diversification in that part of the business, and they're anyway generally not very big on the options trade in comparison with perhaps players like Angel or some of the others. So that might still be an interesting play. We have some investments in Motilal and BSC and CDSL. I think BSC and CDSL will also benefit because as an exchange they used to earn lower fees from the largest transacted players. Now the average fee that they will have to go to after October will be possibly to their advantage. It won't be to their disadvantage compared to what it was earlier. So I think they will end up being a part beneficiary of this. So I think I'd focus more on the CDSLs and the BSEs, but as with times going by, I think as more an F&O trading gets into focus, we might see some negative news on that front, either from the budget or from SEBI going forward. So you have to be careful about how you take this bet.
Be careful, tread with caution. That's the word coming in some of these market-related entities. In the meantime, it's really status quo, 24,195 in the Nifty futures, large chunk of the Nifty in the red, while the support is coming in from IT, from L&T and from HDFC Bank. Of course, there are lots of individual buzzers within the broader end of the market. We're going to address all of those after this very quick break.
Right, so a bit of a profit taking, not a whole lot, but one area which I want to talk to you, Deepak, about is the IMFL space. You have a lot of them in your backyard. In fact, one of them we were speaking with this morning, and the Karnataka-based Amrut Distilleries was there on our show earlier, and you may want to pay them a visit in the near term because they are planning to hit the D Street as well. We'll play a small message from them earlier where they confirm that in the next 1 or 2 years they are planning to go public. But we have taken a look at the EBITDA versus MCAP, and Allied Blender, which has got listed today, is the least one out of them. United Spirits, well, it's the industry leader, deserves a premium at 45 times, breweries 49, Allied Blenders at 25 times. Have you looked at this space? Anything which you like there? Would you like to own, Deepak?
We own United Spirits. I think the idea of here is in some way the premiumization that they themselves are doing, and we think that India as a consumer is going to do because there is a demand for more premium liquor. So while it was McDowell that was driving most of the profits, perhaps, or most of the revenues earlier, their ROC now has consistently improved as they've premiumized. And I think that progress is going to be ongoing for the next few years. So while it trades at a very high multiple today, I think in the future, as they establish more of their larger brands, I think we will see much more action from the revenue and profit front in terms and margin front as well. So in that context, Amrut is interesting because it's very high margin, it's very high premium, it's single malts, which is even more premium than what United Spirits does for the most part. But I think I'm not sure about the rest. For instance, Radico may not be in that level of premiumization. So I like United Spirits, but not the rest of this pack right now.
At the moment, it's a closely held family concern. And of course, there's a lot of interest in Amrut itself. The family board is yet to take a call on whether we should go public. But having said that, I think we might have to bite that bullet and probably in the foreseeable future, probably within a year or two, I think we should keep our options open in going public in the street, please. Yeah.
Right. Kunal, you as well have been liking some of these liquor names, right? I mean, we've talked about Radico as well as USL in the past. What is it that can be bought afresh? And should one even venture into a fresh trade now?
So I think the only stock which I today saw as a breakout is GM Breweries. I think that's a chart which is, of course, it's higher by 10-15% or more on intraday basis. But then when you look at this as a congestion breakout, it looks like that the stock is coming out of a major multi-month consolidation. And this may not be a terminal move, but this could probably be a starting move for the stock. in terms of a near-term to medium-term trend for itself. So I think at 755 level, which is the breakout point, we keep the stop loss maybe a 5% lower from those levels. So 725 approximately could be kept as a stop loss for the trade. And I think on the upside, we could be looking at a 150-point breakout from the 750 levels, which should take the stock higher to almost 885 to 900 odd zone.
Okay. Naresh, wanted your take regarding some of these paper companies, JK Paper, Andhra Paper, Sheshasai Paper. A lot of these names actually perking up quite a bit. We'll play the bite of the management of Quantum Papers as well, because he did confirm to us that these companies have managed to take price hike of anywhere between 2 to 3,000 rupees per ton, and some more might be on the anvil given the fact that overall raw material price has gone up. But they're quite confident of an uptick on the volume and the margin bit as well. We'll play that soundbite, but before that, Naresh, a view on some of these paper companies?
So the largest of them, JK Paper, has been breaking out for the last many weeks. So we've seen that finally the same momentum has come into the rest of the names. Out of the current breakouts today, Sheshasai Paper still looks interesting because it's just close to the recent 52-week highs breaking out. The second largest paper, which generally has a good trend, is West Coast Paper, which has also broken out. So this could be the choices in the segment. JK Paper seems to be overdone in the short term, but a basket of West Coast Paper and Sheshasai would be a good trade in the short term.
Certainly have been price hikes in the last 2-3 months. I allude to the fact that we have increased 3,000 to 5,000 rupees per ton on our paper prices in these 2-3 months. I think going forward, this is a trend which is going to continue. There is clearly a positive and uptick in the demand and pricing situation. So the industry is going to take advantage of that and see price hikes coming in future.
Deepak, what's the take on IT? I mean, yeah, stocks have already moved up a fair lot in just the last 1 week, or for that matter, the Nifty IT index is up nearly about double digits in the last 1 month or so as well. But brokerages are now believing that growth could be bottoming out in the, in the second half of the fiscal. What's your own sense?
Aisha, I think IT, I mean, we have some investments here, but I think it's going to be a little frustrating for the rest of the year. I don't think you're going to get a lot more clarity unless it is fairly clear who wins, say, the American elections. Most of the business happens to come from the US. The European and Japanese markets are probably going to remain low for a while, they sort out their interest rate issues with and their debt issues. So the growth story of the world, which is really America at this point, that's running through a bit of a. I mean, it's going to run through a bit of a slowdown, at least for the rest of the year, until we get more clarity. So I don't expect something major to happen. I don't see any major spending increases. I don't see the pressure on projects coming down meaningfully after maybe technologies like AI, but also the over hiring of the past. There's a bit of an overhang of both of these things that sit on the IT growth trajectory that will slow it down. I don't think we'll see much more before the end of the year, but happy to wait. We're in result season coming soon. Hopefully we'll be surprised from what they have to say, but I'm not going to hold my breath till December.
Fair enough, but IT hiring for now has dipped into the red again, and that's negative news for InfoEdge. We have been running those JobsPeak index data that came yesterday, because overall there has been a dip of 8% in terms of hiring, not only on a year-on-year basis, but even month-on-month. And overall, we have seen that IT hiring, after a couple of months of green tick, has actually moved into the red, and that's the reason InfoEdge today, and you should pull up the daily chart price, that is showing a downtick of almost 2 to 3%. But shifting focus to what's been happening to that entire Hindenburg saga, Deepak, do you think there's anything to be concerned about for the investors of the Adani Group or even Kotak Group for that matter?
So Kotak is clearly, I mean, I don't even know what to say. If they were anything, they were probably a broker. A broker cannot determine what his customers will buy or sell. So I don't think they are in meaningful, and they have put out clarification saying they didn't know this group was involved in the first place. And perhaps, I don't even know if they did, could they refuse business from a group just because it was Hindenburg? I'm not sure of the answer of that. But does this reflect poorly on Adani? I mean, SEBI seems to have, at least at from their view said that there's nothing wrong with, we don't see anything wrong with what they've done. Some of the allegations in the Hindenburg report are like a little bit too, flowery in terms of language. They're intended to influence more than inform. There is a lot of, unnecessary, speculation inside of that report as well. So we look at it, trying to look at it from a fact basis. There's very little in there that is meaningful enough for us to say that there's something wrong, even if we looked at it. But the people that did look at it said there seems to be nothing wrong, and then you can't make those assumptions that just because a guy named Hindenburg, there was one Hindenburg that was a disaster. I don't know whether this one's going to be as bad, but I don't think I'd say I'll trust a Hindenburg report over a lot of other regulatory body activity over here. So I don't, we don't consider it a cause of concern. We don't have many investments in the Adani group of companies anyways, so not much skin in the game here. But on the face of it, doesn't seem like a big deal.
So that is about the Hindenburg saga which is playing out. Let's talk about some other stocks. These are, today Fusion Microfinance actually last evening, called out 25% kind of growth for the new year. And this, I'm sure they've taken into account what's happening in the sector, which has got marred with a bit of, if the government actually tilts, or state governments, several of the state governments are also tilting towards, the rural and urban kind of a divide, the rich-poor divide, and they are tilting in favor of the rural population, giving them waivers of all kinds. And this is the lender fraternity which actually is most active and has the highest amount of exposure there. This risk is coming to fore, and still they are giving 25% kind of a growth guidance. Do you think this entire MFI space can meet this kind of high growth guidance from here on, or these estimates are at risk? Deepak?
Sorry, I can't, I missed the name of that company.
Fusion Microfinance is one, but the entire sector, mostly be it Credit Grameen or many others, is a very high growth category for so far.
Yeah, I think my view here is that one of the reasons why you got a little bit of spooking in the microfinance space is actually because of whatever has happened in perhaps Telangana, where there's been a loan waiver. There's been talk of more loan waivers from other assembly, perhaps future elections as well. And, the writing is on the wall. If you're going to get loan waivers, you should stop paying your loans now, because eventually they will only give a loan waiver to someone who is in default. So if you actually do pay back your loans, then your loan waiver is not actually going to help you, right? So you're going to start defaulting now in anticipation that eventually you'll get a loan waiver whenever your turn for elections comes. So it hurts microfinance the most, because a lot of the rural areas, the microfinance territory, if you may, has a lot of the farming community who may not be able to make a differentiation between a farm loan that is getting a waiver versus a microfinance loan which does not get waivers. So perhaps that plays down a little bit on the sector overall. But you'll find that a lot of the microfinance players now have both urban and rural participation. Some of them are able to diversify across the landscape and then therefore reduce their farm level microfinance lending, which therefore reduces the impact a little bit. So maybe there's some pockets which are more impacted, some pockets which are less. We're just avoiding the whole sector at this point, because we're like, wait till, you don't want to pay high valuations. You'd rather buy these sectors at very, very low valuations. And I don't think we're there yet.
Deepak, always good to have you on the show. Thanks for taking the time out and joining in. That's the word on MFIs, a clear avoid right now. But let's take stock of what the mid-cap end of the market is doing. Quite a few individual names which are holding out. Real estate definitely is looking quite smart. There are a bunch of specialty chemical names as well which are propping up. And then, of course, mid-cap IT also is the flavor of the day. Kunal, what are you picking out?
From the mid-cap end, in fact, it's a large-cap name, Aisha, which I've flagged off. So it's Bajaj Finance, looks attractive. And, the best part is that the stock is showing a lot of resilience today, even on an intraday basis, where there has been some selling in the financial services space. So the stock has come back towards intraday highs of 70 to 50 approximately. Looks attractive for a closing trade.
Okay, that's the closing trade, and definitely it's a large cap. Bajaj Finance, that's a buy. Naresh, what about your closing trade ideas?
So that would be a buy on NLC India, which is Navy Lignite company. The stock has given a breakout above the 250 mark, which was a resistance for the last 4-5 months. 6-7 attempts done around this area. Good price volumes today. So expecting it to go towards 290 to 300 in the short term.
Okay, we're going to take a very quick break on that note. Just about mildly in the green. Let's see how the last half an hour of trade pans out this afternoon.
Welcome back. Well, the markets are in the red right now, but there are individual names, the likes of KFin Technologies, Aditya Birla Retail, Tata Com. In the last few minutes, some of these stocks have actually managed to perk up. So just watching out for some of these names in the trading session. ABFRL actually headed closer to that 230 rupee mark, and Tata Communications too actually working up very nicely in the trading session right now. What's your view? And I beg your pardon, 330, not 230 on Aditya Birla Retail. Kunal, you've been positive on ABFRL and even Tata Com for that matter. What's the view now? What should one do?
So I think hold on to long positions for both. In fact, ABFRL gave a classic swing buy just about few days back when it had come back towards 315 or 313 odd mark. It had come back to that 20-day moving average, which typically in a strong uptrend becomes a good buy on dips kind of a territory. So it remains a buy even at current levels, and in case if it dips down back, say again to that 20-day moving average around 315, 320 range, I think it could be a good buy zone there for traders who've missed out. For Tata Communication also, I think it's a classical breakout. So what's actually happening for Tata Communication in the charts is now with the prices showing signs of a reversal, the 50 DM has started to slope up higher, and I think that's a very rare kind of a phenomena because prior to a price recovery, if the averages start to shift up higher, that generally intensifies the pace of uptrend for stocks. So I would probably believe that going forward, Tata Communications should probably rally significantly from current levels, expecting targets in the range of 2000, 2050 also.
All right, Tata Communications. Varun Sabu, head equities at Anand Rathi, is also joining us now. Varun, afternoon. How are things at your desk? Are people keen to hang on? Are you advising them to trim profits or shifting positions to areas which have not moved much? How's the activity? Give us a gist.
Yeah, thanks again for inviting us on your show. If you go back and see all my commentaries, actually we have been quite on the positive side. We still remain quite bullish on the markets. I have mentioned this before. I'm reiterating this. So one has to keep in mind that when we look at the markets, there is an element of fundamentals, how they are moving. Second, also on how liquidity is moving, right? If we talk about fundamentals, there is nothing better than our country. Today, we're talking about our country where we'll see at least a 14% plus odd nominal GDP growth. We are seeing every year analysts creating their earnings estimates. And since the last 4-5 years, every time we are coming and upgrading earnings across. That means it's always that earnings are outperforming. So if you see overall in terms of the macro level, our infra growth has been stupendous, right? The way country has been seeing infra across, be it power, be it digital, be it road, be it railway, anything. So that's working out to be very well in the country. And adding on to all this is where your liquidity flows are. We are seeing now SIPs touching upwards of 25,000 crores for mutual funds. We are seeing across AIFs, PMSs, family offices, etc., growing, and numbers are also coming up on them. We are seeing pension funds growing. We are seeing insurance money coming in. So liquidity is extremely strong. FI ownership has gone down significantly, which doesn't impact us anymore. So I think we are in a shape from where we'll again do well. I don't see any concerns right now. We are advising the same, that one should remain invested. There are concerns. People are talking about valuations now being a little high, but if you see, the valuation is currently at about 20 times on Nifty FY26 earnings. I don't see a concern at 20 times where we're going to be seeing a growth of upwards of 14-15% that we're talking about. So how do you assign a peg to the to Nifty? Who decides that a 2 times peg or a 2.5 times peg is correct, or even a 1.5 times is correct? In my view, I think the way stocks are trading at, I think if one has to give a similar kind of peg to Nifty, which is upwards of 2.5 times, we still have enough and more room to go. So I don't see any concerns right now. We are advising people to remain invested, buy more. I think rally will have much more legs.
Okay, stay put. That's the messaging coming in. By the way, just look out for what the global markets are doing because Europe has had a sharp crack. You've got the Eurozone inflation, which has dipped, but across the board, there is some amount of nervousness. We're almost down 150 odd points for the DAX. FTSE as well trailing in the red. The CAC is down 0.5%. And the broader markets as well, the FTSE MIB as well as Stock 600 are taking a knock of anywhere between 0.5% to a little over that. And so is the case with the US futures too. We're down 130 points in the Dow futures right now. S&P futures down 0.5% and the Nasdaq futures as well down over 100 points as we speak right now. And that sort of weakness would rub off on our markets, although for now we're fairly resilient. But Ansh is here to detail out all the volume buzzers that he's been tracking in trade. Ansh?
Right, so Deepak Nitrate will be the first stock in focus as the stock has given a breakout from its cup and handle chart pattern which was intact for last 2 months. Also in addition to this, the stock has also touched a 2-year high as well with good volumes. Apart from this, HDFC Bank will be in focus as the stock has given a breakout from its 5-session consolidation pattern touching 11-month high as well. Torrent Pharma is also in focus as the stock has given a breakout from its downward sloping channel indicating a potential reversal in trend on upside. Lastly, LT will be in focus as the stock has given a breakout from its downward sloping resistance with good volume. So keep an eye on the stocks.
Point taken, so we'll watch out for all those price volume buzzers. But in the meantime, my colleague also caught up with the management of Mercedes to get a sense as to how the luxury sales have been so far. Listen into a slice of that conversation.
We have 3 cars in the portfolio, and if you see our first quarter results, close to 5% of our car sales are EVs today. This is, I think, clearly showing that the transition is coming, but it will come at a slower pace because I keep saying EV transition is a marathon and not a sprint. So it takes time. For us, EQA is a big step because this car comes almost at the on-road price of a GLA, which is one of our best-selling SUVs in the luxury segment. So I would say that for now, customers have a choice between gasoline, diesel and an EV.
Let's talk about general market because we are in the middle of the calendar year. First quarter has gotten over. How's been the market so far?
I think it's been a great H1 for us. As such, we had a great quarter 1 as well with double-digit growth. I feel that, of course, quarter 2 was a bit more muted considering elections, heat waves, and most of our customers are also traveling to other parts of the world. You know, they are in UK or in other parts. But I think the full year, our outlook still remains positive for a double-digit growth for Mercedes-Benz.
And talking about more models, every year we are used to seeing more models from your side. All models, they are on track to launch?
Yeah, we have 12 new cars that we committed this year. We have done 6 already in the H1. The balance 6 will happen in H2 of this year from July to December. The EQ A is the 7th car. We have also said we will get 2 more EVs. So there will be 3 EVs this year that we are launching. And of course, it's also public knowledge that, the most awaited car, which is the long wheelbase E-Class, also makes its debut at end of the year. We also have a couple of units left now for the current generation E-Class. There is a great demand even for that. So I think, this year we should stay on track with the 12 launches that we committed to the market.
Okay, one last thing. Budget this month coming. Sometimes it happens that government finds the easy target in luxury car players to tax them more. What is your assessment, expectation, demand from the government not to tax you more?
I think firstly, the growth in luxury segment and also for passenger vehicle market has been the excellent growth in road infrastructure. Today we were just discussing you are going back to Delhi by driving down because that makes more sense than flying. I think and that's also driving our growth because people want luxury cars, they want safer cars and therefore we would be keenly watching that the capital expenditure on infra, especially roads and infra continues because this is something that will drive growth. Not only for us, but I think it also drives economic development. So that's one thing that we are keenly looking forward. The second thing, of course, when we spoke about electrification, and here the government has already a concessional rate of 5% GST. We understand GST is not part of budget, but can there be a long-term commitment from the government that these kind of tax incentives will continue for at least 8 to 10 years? Because it's again, I keep repeating, it's a marathon and not a sprint. And when you have to run a marathon, you need to be clear of what the conditions would be around and how much we as OEMs can also invest in this long-term futures.
Yeah, that's the take coming in from the luxury car maker, that's Mercedes-Benz. But Varun, what's your view on autos right now? Given that most of them are sitting at their all-time highs, do you believe there's still value at this juncture? And would you recommend buying into any of the auto names?
So I agree with you that there has been quite a sharp rally that we have seen in autos. But that's backed by fundamentals, right? We are still seeing growth remaining strong. Yesterday, volume numbers got reported. All of them reported quite well, starting with Hero MotoCorp, which was absolutely a stellar number, which they reported, clearly indicating that things ahead look quite good with the kind of inventory buildup which has happened. So we have been very positive on the two-wheeler theme. We continue to remain very positive with that perspective. There was a little slowness in April and May, led by extreme heat. There was lack of any festive marriage season, etc. There was a little bit of a blip coming. I think things will start reversing materially. That's visible from the numbers in terms of the inventory buildup that we have seen that the company has done. So two-wheelers still remains fine. We like Hero and TVS there. In terms of four-wheelers, we are already seeing that on a very high base, they continue to report still 4-5% kind of growth. I'm not saying I'm very bullish on four-wheelers, but yes, partly I would still think Mahindra and Mahindra is one of the names which one can keep an eye on, considering the fact that there is scope for margins improving over there. Plus, they have their EV launches going forward, etc., which could be still an interesting play in the four-wheeler space. Apart from this, in autos, we don't see too much value anywhere remaining. We, in an ancillary side, more on the tire side, we remain very bullish. So we are extremely positive on Apollo tires and JK tires, particularly. So these are two names which we really like in the Ang space, particularly tires. So we are extremely positive on tire as a theme from here also.
Okay, positive on the tire theme and the overall sector that ways. But just flagging out some of the stocks which have lost out in the last few minutes. Max Healthcare saw a large trade and that stock is down 5% in the trading session. Prism Johnson has turned red. There's a downtick of 4%. Shriram Finance, a sizable cut of 4%. BSE is down. We also have Vodafone Idea in the red. And in the last few minutes, Hindalco has taken quite a bit of tumble as well. I see a correction of almost 5% which has happened from the top as far as Hindalco is concerned. It's holding out in the green, but okay, not showing as much on the screen as it is possible. But in the meantime, I also wanted to play out some of the sound bites of the management that we spoke with earlier today. DCX System is one such stock. They backed a large order of almost 1200 crores from L&T, and the management is quite hopeful of a solid growth from here on, plus an improvement in margins. Listen into that stock. It's up almost 13%. Listen into the management.
Improve our marketing capability. We have taken a big account, like we added Bharat Electronics, we added L&T, we added Lockheed Martin. There are couple of more too in the converting stage now. We are also enhancing our customer base as the domestic, as the international. Definitely, we are working for the improve our margin better. So for many reasons, we can improve the production capability, backward integration, supply chain system, logistic. Many things are there. Company is fully focused to improve margins, also to have a very good pipeline, healthy pipeline order in upcoming days. That is also we are concentrating, but we are fully focused. We are confident we are going to improve our margin and taking all this consideration in future coming days.
Okay, that's the word coming in from the DCX management post the order win from L&T. In the meantime, let's take it across to Sharad as well, find out what the dealing room chatter is and what are the stocks that are being talked about. Sharad?
Well, yes, in focus is Sumitomo Chemical, and what we are gathering from the dealers is selling is coming from an FI, and it's expected that a domestic mutual fund has absorbed that selling and might be buying the shares. Interestingly, 5.5 lakh shares have exchanged hands in the day's trade, and the volumes have also been significant over the last two trading sessions. Now, overall, the FIs are having a minuscule 2.75% stake in the company, with the names such as BlackRock, Vanguard, and even not just Bank also having smaller stakes in the company. Also, interestingly, if you look at the triggers, especially in the agrochemical space, it looks like the bottoming out is there, as there is an improvement seen in the crop nutrient products which the company offers, and also the inventory situation globally as well as domestically has been improving for the agrochemical stocks. Now, of course, the companies are expecting to pick up this healthy demand by the second half of FY25 as well.
Okay, we'll watch out for the name and what's happening to that one. Quickly, Varun, a take on the power stocks because they have run up quite a bit already, whether it's power financiers, whether it's the generators or even the ancillaries for that matter now, right from a cables and wires to a transformer to other names. What within that entire power ecosystem would you still bet on?
Coverage on this space, but I can give you a perspective that we would be positive more towards the power financiers. I think they've been doing well, and they still have some value left if we go and see the valuation on the consensus basis, what it's looking like. So still PFC, REC stand as better picks than going in for the major power guys. If in the power producers we have to look at, I think NTPC still stands to be an interesting bet.
PFC REC is still a favorite despite that massive run-up that we have seen, and NTPC, that blue-eyed boy of the entire power sector, is still something which is positive for the investors, at least the word coming in from Varun. Hear out what the Power Secretary had to say because, of course, in the months of summer, we had seen a huge spike. What do they have to say about the supply side of things? Listen into a slice of the conversation Power Secretary had with the media personals.
We had projected our 2031-32 peak demand is 384 gigawatt, and in the last 2 years we have witnessed a very sharp increase. This year, in terms of megawatt, it is already up by more than 9%, and in terms of million units, it is already up by about 11%. If we compare the Q1 of the current financial year with the Q1 of the previous financial year. So these recent trends we have fed in the model, and we are now working on for the projections. We are updating our projections. We have been working with the states. Some of the states have already updated their demands. Challenges are basically mostly related to the preparation of the grid. What they do is they normally work on the RF mesh, and till the mesh is there, probably the meter doesn't get activated in the smart mode. It remains basically a normal electronic meter. And once there is a communication mesh, then it starts functioning like a smart meter. Then there are contractual issues like somewhere AMISP has come, but the single-phase meters are there and they need the three-phase meters. There are an empty number of challenges at the ground level. There's no policy restriction. The policy actually means that the two should actually work together so that the consumer at large need not to spend money. There's duplication of investment.
Right. Varun, what are your thoughts on some of these agrochemical companies which are focused on the domestic market? Have you guys started recommending your clients to buy?
Yeah, I think there are some of them which are looking okay. I think UPL currently seems to be decent after obviously having a bad quarter last one. But otherwise, the company has been doing well. I think what we understand, April and May are turning out to be decent for the company overall, and should turn out to be a good quarter. They have been. The bigger point which one has to keep a focus on is the leverage part, which they keep commenting on, the debt repayment part that they keep doing every single time. So we are still hopeful that this year also they will live up to reducing the debt by the amount they keep talking about. So that is one name which is good. We have been positive on Sumitomo Chemicals. We have been talking about it to our clients. So we remain positive there also. So I think in agrochemicals, these are two names which would be something we would still be okay with. And something related to agri, I think agri as a theme should do well considering monsoons are turning out to be good, and there is a little bit of hope that from the budget also we should see some positive around it. So I think one has to keep in mind that ultimately NBFCs like Shriram Finance and Mahindra Finance and all should also do well, which is another segment where we have been talking to our clients and we've been positive around it for a while now. So yeah, this is what we would look at.
Mm-hmm. What about the tire companies, that part of the auto ancillary? Anything which you like there?
Yeah, I just mentioned that we're very positive on tires overall. There has been a big structural change there. So we are very positive from the perspective that they take price hikes whenever there is a pressure coming on the cost front. If you see in May, these tire companies have taken price hikes. I think last week again they had taken another set of price hike. which is a very positive thing. So what happens is that the margin issues which used to happen, the volatility which we used to see in margins earlier, that has come off quite a lot. So earlier we used to see margins dipping to as low as negative. It used to go into negative territory earlier, right? Now that doesn't happen. Now margins say the peak and trough is somewhere between 8% on the trough side. Peak can be as high as 20%. And they somehow are maintaining now a 14% band in the worst case, 14, 15%, somewhere in the median, versus earlier the median being around 7, 8%. So that's a big change we are seeing. So I think there should be a material re-rate in valuations. These stocks are available at 12, 13 times earnings, which is nothing today, versus how the market, etc., has been trading. And for the growth which is there, I think these companies can easily trade somewhere between 18 to 20 times earnings. So I think there is good upsides available both in Apollo Tires and JK Tires from here.
Right, okay, that's the take coming in the tire stocks. That's the much preferred lot from within the entire mid-cap auto ancillary space at least. But Kunal, the auto charts that we've been talking about, M&M, Tata Motors, Maruti, what is it that you're liking right now?
So I think Ashok Leyland is the other stock which has done pretty well. That stock is now at 230 to 235. Much about the breakout levels or the big breakout points of 175, 185 for Ashok Leyland, which has been a major resistance for the stock on a long-term basis. So now also I think the stock looks to be in a fine fettle. It's going through a patch of consolidation because of the way many of the other auto stocks are also going through a patch of consolidation for itself. Tata Motors also I think is now making a comeback again about the 1,000 mark. So it's struggling a bit over the last few days, but I believe that if in the next few trading sessions or in the next 1 or 2 weeks, the stock scales past about the 1,000 levels, I would believe that momentum could come back again for Tata Motors. So going with the stronger names over here, Ashok Leyland as well as Tata Motors out of the other names.
Okay, Ashok Leyland and Tata Motors, that's the preferred lot from within the autos. But Kunal, let's also have your closing strategies or rather BDST trades on that note.
So I'll go with the first one, a buy on Liberty Shoe, a stock which on the mid-cap front is confirming a breakout on a multi-month, multi-quarter basis. So would suggest a buy with a target of 450. Stop loss could be kept at 385. And the second would be a buy on ICICI Pru. We discussed this stock in the morning, confirming a flag pattern breakout about the 620 plus mark. So would suggest a buy with a target of 660. Stop loss at 600.
Okay, fair enough. Those are the top BDST trades right now. Naresh, what about your recommendations?
On NLC India, the stock is broken out with good volumes. Would give a stop loss closer to 252 and a target price of 265. Second is a buy on IGL. The stock has given a major breakout. After 2 days of rally, has pulled back a little today. So a good entry point. Stop loss at 510, target price of 530.
Point taken. Railways is one space which has seen massive traction. It's been one of the key focus areas of the government. But what about this budget? What kind of expectations should one have? What kind of budgetary allocation can come through? And what about that entire Kavach scheme, which has been much talked about? My colleague Samir has done this exclusive story. He's picking up from his sources as to what we should expect. Listen into that.
Sources have confirmed that government is going to continue its focus on the massive upgradation and the expansion of infrastructure, and in the same direction we will see a higher budgetary allocation for the railways as well. Around 25 to 30% higher budgetary allocation year-on-year basis that we can expect from the government. Announcement might be there in the upcoming budget, and this means that for FY 2024-25 the budgetary allocation for railways will be somewhere close to 2.95 lakh crore to 3 lakh crore. And the higher budgetary allocation means that railways is looking for a massive transformation in the passenger side as well as when it comes to the digital service side. When we talk about the passenger side, Amrit Bharat train, popularly known as Jan Sadharan train, railway plans to roll out 250 Amrit Bharat train that have general class and the sleeper class coaches in next 5 to 7 years. For this year itself, railway has set a target to roll out 25 Amrit Bharat train, and not just Jan Sadharan train but also a clear focus on Vande Bharat train as well. For the first time, the sleeper version of Vande Bharat train will be out on tracks. The trial is likely to begin by 15th of August this year. Railway targets to roll out around 6 Vande Bharat sleeper train on long route journey, whether it be Delhi, Mumbai, Delhi, Chennai or Chennai, Havra. So in addition to Vande sleeper train, railway is also looking to roll out around 8 to 10 Vande Metro train that will provide intercity connectivity somewhere around 150 kilometers of running that will be done through the Vande Metro trains. For example, route like Delhi Dehradun. So that is what Railways is looking at. So apart from passenger side, Railway is also likely to come up with a super app, the IRCTC super app, and with this super app, Railway is planning to attract new customers in the freight side, especially in the parcel segment, the e-commerce entities like Amazon and Flipkart. Railways is looking to infuse to enhance the investment in Concord, the Container Corporation of India. So with the increased investment, Railways is also looking to provide more wagons to Concord that will help to increase the freight basket. So that's a larger plan that Railways has. But in addition to all this, the clear focus on Kavach, the safety mechanism will also be there. And for the same, the higher budgetary allocation for the safety will be done for the FY 2024-25, and Railway targets to cover 4,500 kilometers of rail route network through the Kavach system. So that's what we can expect from the upcoming railway budget.
That's the eye on railway budget and the chatter that we're picking up. But Varun, tactically, what's the view on railways? For now, do you think the best is behind us and it's time to take the profits off the table if you've not done that yet?
No, I don't think so. One has to keep in mind that we have a continuity in the government. I don't think so the plans are going to change too much. So there has been a clear focus on expanding rail networks and overall the kind of trains which came up, the Vande Bharat, etc. These are phenomenal changes we've seen, right? And just the beginning of it. We also have to keep in mind that exports of the same are also going to start. So there's a long way that these companies can go for, and we have started from a very, very low base. So I am very hopeful still on the railway space. In fact, not only on the railway space, but across any of the themes which are running so far. Yeah, it can be that valuations have been a little stretched, but there can be a little bit of time correction, and then earnings growth catches up, and you're again in place. I'm still positive on something like a defense theme or railways, etc., which was going around all the time. So I don't see any change to that narrative which was there.
Yes, and there was a positive news flow today on defense, wherein certain of the segments have been put up for indigenization yet again, certain components. So that's going to give another fillip to that sector. But talking about chemicals, Kunal, some of these names, Sumitomo Chemicals, Archean Chemicals, even Deepak Nitrite and Deepak Fertilizer for that matter, are perking up. Anything within the fertilizer universe that you would want to bet on?
Yeah, so I think Sumitomo Chemicals is something which has given a breakout. Again, a flag pattern breakout, which means the stock consolidating for last entire month. So I think in the month of June, the stock was into a range of 460 to 505, 507 approximately. That range has been broken out, and this could probably mean that we could be looking at least a 40-point of breakout for Sumitomo Chemicals. Would look out for target in the range of at least 550, 555. Deepak Nitrite, on the other hand, even though the volumes are a lot more higher today for the stock, but because of the way the stock has run up from the June lows, I think it was almost at 2150, 2100 mark, and now it's currently at 2700 levels. And today, on an intraday basis, the stock has ebbed off from the day's high, which means that there could probably have been some selling for the stock, or maybe some sort of profit booking. So would wait out for a buy on Deepak Nitrite. But I think Sumitomo Chemicals is something which is interesting at current price.
Okay, that's the take on specialty chemicals. But Varun, Kunal, Naresh, we'll all let you go on that note. Thanks for joining in as always. Let me hand it over to Vinny to walk us through the closing trades.
So absolutely a day that we'll be closing a bit on the subduedness and the side of the red is what the Nifty will be closing at, as well as the benchmark indices opened up at the day's high. Green was what it was trading at, but yes, at the end of the day, we'll be closing with cuts of almost 0.1% in trade as of now. Like you can see, the Nifty as well as the Sensex both in the red. The broader markets, let's pull that up as well, where the Nifty mid-cap is doing and what the Nifty small-cap is doing. An underperformance again today that we've seen coming in for the Nifty mid and small-cap versus the benchmark indices, both down more than 0.5% in trade. So keeping an eye out on that. Nifty Bank also today trading in the red, down 0.7 to 0.8% in trade is what we're seeing in terms of the Nifty Bank. Let's also look at Kotak Mahindra Bank. That did make a recovery from the day's lowest point, but yes, we'll be closing a bit on the red side. Kotak Mahindra Bank down 2%. At one point of time it was down as much as 4%. So slight bit of a recovery that did come in for Kotak Mahindra Bank, closing with cuts of 2%. ICICI Bank also under pressure today. We have seen SBI not doing too well. So yes, that is all causing a bit of a pressure coming in for the Nifty Bank. Other than that, today advance decline ratio slight bit and skewed towards the decline side versus the advances, keeping an eye out on that. IT, that continues to shine today as well. So Nifty IT surely in focus today. We had a brokerage note that came in from Nomura. Wipro continues to be among the top movers there. We have Coforge, Birlasoft, TCS, surely holding on to very, very strong gains that we saw for the Nifty IT. Other than that, today we are seeing Nifty Media also again managing to hold on to gains. Yes, not PVR which is performing today, but we had Nazara, we had Hathway, we had Sun TV, Z, which managed to hold on to some bit of a gain today in trade. So yes, what we are seeing in terms of a sector move, Nifty IT, Realty as well as Media managing to hold on to good gains. Now let's talk about Realty pack, because today when you talk about Realty, 0.7% of gain, and in that we have seen Godrej Properties among the top gainers that's coming in there, and among the top FNO gainers. So you're surely an interesting day that we're seeing coming in for these sectors. Auto, PSU banks as well as FMCG among the top sectoral gainer. That's how we'll be closing the day today.